Welcome to Community Forum. My name is John Gogliettino, and I'm your host. This evening we're going to be talking about taxes. Taxes is always a stressful subject unless you're always getting money back. Then it's not stressful. But not too many of us have that privilege of getting money every time. And one of my crew people, Anthony DiCaprio, is also a certified tax preparer. And we're going to be talking about what's up now and any nuances and what have you. So enjoy the ride, so to speak, and I want to welcome you once again as a guest to the show. Can you tell us anything new and exciting in the way of anything we should get our hearts up to?
Well, when you talk about taxes, exciting may be a little bit of an exaggeration, but there are some changes, and we have a new tax bracket. This is the second year we have another bracket. And we have a few additional taxes for those people that make $400,000 and over, $450,000 if you're married, filing jointly. Those are really the key issues. There's also what we call the Affordable Care Act, otherwise known as Obamacare. And we have implemented that. This is the second year, and this year the employer mandate kicks in. And there are those people who in 2014 participated in the marketplace, so to speak, and they got some people got subsidized for payments for health care, and depending on what income they had, they either had to pay it back or they got additional subsidy. So, and that was the 2014.
That's the most important thing about this year, because this is the year they might be paying additional taxes because they got another job and they forgot about that. And
that's true. I had one customer who in 2014 estimated his taxable income to be about $25,000. Well, it turns out that he got a job. His wife got a promotion, and their income was $75,000, and they wound up having to pay $12,000 back because of the premium tax credit. So you have to watch all of those things. And
they should have gone immediately when they had the changes and notified they
should have. But the truth of the matter is they didn't even realize it. They didn't realize that
the
subsidy could go back. They thought it was a subsidy, and it was based on an estimate for 2012. But then it was really income in 2014, and it was 3 times what they thought it was going to be, and that's what happened.
Now, see, something like that would give people a heart attack because they usually don't have $12,000 laying around.
My customer was pretty upset. And he didn't have a heart attack, but he was close. Let's put it that way.
That's what I'm talking about.
But this year, for 2015, they've gone one step further, and now the employers are involved in it, and the
Cadillac tax, right?
They also have the potential to pay some extra fines, taxes, penalties. So it's another step in that direction.
If the plan is too good, you pay additional tax. Everybody's paying taxes, but you pay an additional tax if it's what they call a Cadillac plan.
And it's aimed at making sure that the taxpayer gets the right deal, that the taxpayer is not overpaying for his insurance. And so that remains to be seen how that's going to shake out. We'll see. But it's one of those things that as a tax preparer, last year, 2014 tax returns was the first year we ever even considered health insurance. Health insurance was never part of our bag. We don't know about it. So we had to really learn fast.
Had to bone up on it.
Yeah, we had to. We had our baptism under fire, and for the most part, we were able to do it. It's not that it's terribly difficult, but it's something that we were just never involved with. And this year we're going to be more involved with it. There's not a customer that I see that the first question out of my mouth is, what is your health insurance? Did you get it from the exchange? Did you use Access Healthcare or New York State of Mind? These are different websites that people can go on to get health insurance. And if they have it, then there's a form that they need to give me when I do their taxes. It's called the 1095A form for marketplace health insurance. And they've added another couple of forms for this year if you are an employer.
If it's a larger carrier, it's C, right?
It's 1095B for an employer that uses an insurance company.
Okay.
And 1095C is for self-insured.
Oh, self-insured.
Self-insured,
Okay.
and by definition, larger companies. I mean, unless you're a big company, you're not going to self-insure for the most part.
Well, your name could be Bloomberg, and
Yes,
self-insured too.
So those are the three forms, and we are supposed to get one of those forms unless you're on Medicare via Social Security, unless you're on Husky or Medicaid. Or other than that,
I think that those are the
and unless you're on VA,
yeah.
or you don't have your income is such that
I think you covered
you're
them
exempt.
all. Yeah,
Yeah.
I think you covered them all.
Yeah.
Yeah.
So that's so if I don't get one of those forms, I have to ask, well, where is it? What's going on? And we'll see how it's going to work out.
One of those categories, or you got to have an exempt form.
Well, there are some exemptions if if you object because of religious reasons. If your income is below the threshold, then you don't have to have health insurance. If you are 2 or 3 months without it, there's an exemption for that. There are certain exemptions where you're fine if you
just won $1 million in the lottery and you want to self-insure. There's a form I think you can fill out.
You have to fill out a form, and then you have to be able to, you have to be
That's
able
probably
to
that 20,
provide the proof.
The 1025 or whatever it is, C, I think, is where that guy goes.
It would be a 1095C, right? And you'd have to fill out that form. You'd have to attest that you have the money. I mean, we don't know how it's all going to play out yet because this is the first year that we're doing it with 3. So it's very interesting.
Has there been any changes in Social Security?
No, Social Security has stayed the same. The threshold for paying into Social Security is $118,500 worth of income. Medicare has no limit, so you can make $1 million. You're going to pay tax on that $1 million. There's also an additional tax for anybody over a $200,000 mark. There's a 0.9% additional Medicare tax. So it's a little bit more complicated now. You've got additional Medicare tax that kicks in at $200,000, $250,000 for married filing jointly. There's something called the net investment income tax, which is 3.8% on those that make over $400,000 or $450,000, depending on whether you're married filing jointly or not, and only on investment income. And the definition of investment income is dividends, interest, capital gains, rental income. There's a whole definition that you have to go into as to what that 3.8% entails. So, and it's not on every taxpayer. It's only on those that reach that threshold, that reach that $200,000 or $250,000 threshold. Creates a few problems because if you're employed by somebody and you make over $200,000 a year, that 0.9 is taken out of your wages. However, if you and your wife make under $250,000, but you make over $200,000, then you're not subject to that, so you're going to get a refund of whatever you paid over that. On the other hand, if there's two-member working household and both are under 200,000, they won't withhold anything, but together they may be 300,000, and they're going to be subject to that tax. So there are problems, inherent problems that we have to work through.
Are there any changes in 401ks and 403bs and that
well,
sort of thing?
401ks, the limit is 17,000, and then there's up to 5,000 additional if you're 50 or over. So that's the same for 15 and 16. So there really are no changes than that. The IRS
the amount of gross aggregate gross causing the Social Security. There's a thing about the joint filing jointly and filing singly. Oh, that's the FICA
FICA
section there.
Yeah. Well,
Yeah. If whether or not there was any change on that.
no change on that, except for that 0.9% additional Medicare tax.
Okay.
If you go into Social Security, that stayed the same. There is no increase this year.
There seems to be a difference in the KEO or the SEP IRA.
Yeah, SEP is different. A SEP can be up to 58,000 if you're over 50. I think it's about 50,000 or
It says
51.
50. It looks like 53.
53, and then there's a $5,000
Yeah.
if you're over 50. So it can go up to 58,000, but it can only be 20% of your income.
It's capped.
So if you made $200,000, okay, 20% would be 40,000. So you can't go the whole thing. If you go to 250, then you can go to the whole
enchilada
ball of wax.
Yeah.
So that's a study in and of itself. All of the retirement plans that are around.
Yeah, and then there's the 401ks and the simple plans. Do they got to catch up also?
Yes.
Yeah. Okay.
Yeah. Simple is 12,500, and then there's a catch-up. 401k we talked about, it was 17 plus catch-up.
Right.
So all of those can be utilized, and there are other plans. There's a 457 deferred compensation plan. Generally, that's for higher income earners like doctors. Danbury Hospital, for example, utilizes the 457, and that is a plan where they defer $50,000, $60,000, $70,000 worth of income that's not taxed. However, if they leave, they cannot take that. They cannot roll that over.
That's supposed to encourage them to stay.
They have to take that money and then pay the tax on it. So
in the same
different
year.
plans. Yeah, there are different plans.
Okay. Now, there's a question that came up with the GE move, and this is happening again and again. I guess I'm just getting your opinion here. Is Connecticut really like a higher tax state as they sound? Because it sounds to me from the move to Boston, it was mainly the $155 million that the state of Massachusetts, as they kiddingly call it.
I mean,
they gave them that had a lot to do with it.
I find that move to be very curious. GE, as you know, when Governor Malloy decided to raise the corporate tax rate, GE, and there was one other one, I think it was United Technologies,
Right.
that decided they were going to move. And so Governor Malloy backed off and said, okay, we won't do that. And then they seemed to be placated for a while, and then all of a sudden there was this move to Boston. But the truth is that any state, any city can offer a special program, and maybe that's what Boston did. I don't know. I know myself, Boston's not cheaper to live than Fairfield in Connecticut.
Fairfield,
I know it's
Connecticut,
not.
yeah.
So I don't think that the employees did any better. I don't know that the wages would be cheaper up there. I don't know if any of those things are cheaper, except that they must have gotten a special program from Massachusetts.
Well, it was in Wall Street Journal. It was $155 million.
Okay.
As a program.
I don't know how you combat that. I don't think that's a tax issue. I think that's an incentive issue.
Right.
And We have that capability if the government so chooses. I don't know why Hartford can't do the same thing to other manufacturers. I mean, hey, it's fair game. Why not?
So you basically have to combat people.
I think you do. I think
because they're shopping.
It's competition. It's I mean it's three companies fighting for market share. That's what it is. It's no different. And Boston and Massachusetts, for whatever reason, decided to do that, and they got about 5,000 employees because of it. And it's Connecticut's loss. I don't see that as a big issue, other than if you drive people out by not offering special incentives, then maybe.
You have to offer the incentives, otherwise you lose the businesses.
I think so, yeah.
It's not so
just
much
like, if you go to sell, let's say you want to sell a line of food to Pathmark. Pathmark's no longer around, but I mean...
Yeah. They didn't buy the line of food and they're gone.
Pathmark said, okay, in order for you to get into Pathmark, you have to give us $200,000 an item. Now, if you want to do the business, you'll consider that. If you don't want it, then you're not going to get in. It's that easy. It's that simple. There's no secret to it.
What other changes have there been? Or they extended that loss on real estate for one more year because I guess the remaining of those people that were underwater.
Yeah, it's what they call cancellation of debt income. And up until 2014, if it was on your primary residence, you could exclude that income from your tax return. They did not extend it until
the end of the year,
December 18th of 2015, to cover 15 and 16. So now we've got 2 more years of that, and so if somebody is underwater and somebody gets cancellation of debt due to a foreclosure or whatever, they can exclude that income from their taxes.
How about small business people, cars and equipment like computers?
Well, they do have something that they just now extended, I think through the end of 2017. They had what they call Section 179 bonus depreciation, so that you could buy a piece of equipment of up to $500,000 and expense it rather than amortize it or depreciate it over a number of years.
It could be a $3,000 computer for a little guy.
That's correct.
So you could take it all on 1 year, opposed to
or depreciate it over 4 or 5 years.
Right.
There are exceptions to that. You can't do that for any automobile under 6,000 pounds. And there's a dollar limit. I forget what that is.
Why is that?
They feel that there would be too much abuse with stuff like that.
People get
You have
lighter
to take
cars.
it over 3 to 5 years.
Yeah. Okay.
That's one thing that you have to do. You can go up to 25,000, and then take the balance in the next year or in 2 years or 3 years, but they don't want you to take it all at once. Unless it's over 6,000 pounds, then it falls under the equipment rather than automobile.
It might be mobile equipment.
Oh, could be. Yeah.
In other words, like a tractor or something.
Oh, a tractor, a bucket truck, a crane, any of those big.
It moves around, but it's not meant for the highway.
Not meant for the highway, right?
Right.
Yeah.
And something like that is equipment, and that could be expensed.
And that can be expensed up to $500,000 rather than depreciated. So that helps small businesses.
And that helps the economy because you got larger purchases like that going on.
Well, that's what they hope to do. Yeah. I mean, as soon as you get entrenched in something, beware, because it could change. And maybe it will change this year. I don't know, because this is the last year for the current president. And the Congress and the Senate are both now controlled by the Republican Party, and they're going to try to enact some changes. I don't know if they'll do anything this year, because there's a president that's going to veto whatever they try to do, I think. But then again, after that,
Who knows after the election?
who knows? So that's what we face. I know one thing. Everybody says that we really should simplify the code, and what they're saying is true. They really should simplify it.
But there's special interests.
But
if you make it a flat tax, then you're cutting out all of the charities.
then the special interests go away. They do
but
go away.
but the charities will go away too.
Oh, yeah.
You can argue that
because there's no incentive.
No incentive to give them
that's
any
right.
money.
I mean, there's and home buying might go away too because there won't be
well,
any.
if you're cutting out the
Mortgage interest and the real estate taxes,
because if you're taking part of it out, you got to take all of it out.
Yeah. What's the incentive to buy a house? You're better off renting if you can't get the benefit of it.
Right.
Because a house can be more expensive than renting. If you have to fix it, you have to do a lot of stuff.
And when you add in the taxes on top of that, fixing and what have you,
then you
could say that over time you might be better off renting.
Renting, yeah.
Yeah.
And
If you didn't have that tax,
and
angle.
that's been a huge advantage for the past 60 years. I mean, it's not new. I mean that you take those away, and I think you change.
You'd have a slower economy because these incentives that you had are going to be gone.
So I think that it's very good. And it would certainly simplify things. But I've been doing this for 30 years. And every time somebody says, we're going to simplify, I get a big smile on my face. I say, okay. How simple is it going to get? And it gets more complicated and more complicated. But that's the way it is.
It's almost like a case of where do taxes start? Let's see if they've actually made it easier at the lower end, because I don't know on the lower end when it actually starts. Could you be making $20,000 and not be paying federal tax?
Most people that make $20,000 would not be paying any federal tax.
No federal tax.
Yeah.
All right.
Connecticut, the tax starts for a married filing jointly couple at $25,000 or $26,000. So, and it's about the same for federal. It's about $21,000, $22,000, maybe $23,000 if both are over 65. But that's about where you start paying tax.
There should be something done at that end so people keep more of their.
Yeah. Yeah. But I can also tell you that if you're making $20,000 a year for a married couple, you're not living very well.
No, you're not.
If you're living at all,
you're living on beans, maybe.
if you're living at all. So,
yeah.
Somewhere in between has got to be the happy medium, and I don't know where that is. I know there's those taxes that were enacted and started in 2014 make the top tax rate, if you add 39.6% and the 3.8% and the 0.9%, you're up to pretty close to 45% for federal.
That's the federal.
That's the federal. So then add another almost 7% for state, and that's most states. New York, Connecticut, about the same. You're at over 50% of your money is going to pay taxes.
But I think if you went back to 1960, the last Eisenhower budget or something, it was at 90%.
They were higher then because they had
they had the war.
They had the war going on, and there was either the Second World War, the Korean War, or the Vietnam War.
Well, they were paying for the interest.
Paying for all of that, right?
Yeah.
And
it was like 90%.
And it was up to was it it could be as high as 90%.
Up to 90%.
Up to 90%, yeah.
Yeah.
And but I mean that's what Europe is. Europe is 60, 70% now. Canada's up higher than we are. I mean, we're still the lowest tax state in the world. Big countries.
When you add in the federal and state.
Yeah, certainly the poor countries are taxed less because what are they going to get?
But you got to admit that if you're a corporation and you got like a Chapter S, you're paying taxes on the inside and you're paying tax on your salary that you're drawing out, so you're paying double the tax on some of those.
Well, on an
some of those
on an
entities.
S corporation is a pass-through, considered a pass-through corporation, and that you're not paying double tax on it, but you're paying part of your tax as an employee and the other part of the tax as an owner. The ones that the C corporation is the one that you could be subject to double taxation.
Right.
If you get a dividend, and because the C corporation, whatever is held, the C corporation has to pay tax on. And then if they give a dividend to the shareholders, they get taxed on that dividend. So there could be double taxation. Yeah. Now it's a little bit more complicated than us sitting here and talking about it, but that's the general rule. I do very few C corporations because the C corporations tend to be the big guys: GE, IBM, Boehringer.
There are not too many people living in Danbury on one of the side streets.
Yeah,
They're running a big entity.
But I do about 15 or 20 S corporations, and they're passed through to their small business owner. And they're small business owners. They range, the income ranges from nothing to $40,000, $50,000, $60,000 a year, and part of that is salary, and part of that is profit.
We got about a half a minute left. Do you have a website or something that?
Yes, I do.
If there's people they have questions, they can
Absolutely.
go look. Yeah.
ADTaxprep.com. So that's AD, which is my initials, taxprep.com.
So there's information there that if they have questions about what you talked about this evening.
Absolutely.
They can
Call
go
me.
there.
You can call me. My phone number is on the website. There's an email on the website that you can use, and my email is anthony@adtaxprep.com.
Okay.
I welcome anybody to call, and I will certainly be as honest and forthcoming as I can.
Well, I want to thank you for coming on this side of the
thank you.
camera to do this interview once again.
Thank you, and now I'll go back to the other side for the second show.
Okay.
It was great doing it, John.
All right. Thank you once again, and I want to thank the guests for tuning in to the Community Forum. Tune in next week, same time, same station. We'll have another interesting program. Good night for now, and we'll see you then.
That's got to be the fastest.